afternoon. This is Chris Brecher with the year-ending Simpler Stocks free video. This is basically for January 4th, 2016. Right now, it's about an hour before the bell. I wanted to get this out because it's probably going to slow down by the end of the day. Basically, what we had talked about earlier before the opening, 3 hours before the opening, and yesterday on the premium side was the bear flags that were developing in a lot of indexes. And so let me show you what we were talking about. We were showing the SPX, and we were showing this beautiful bear flag in here. And sure enough, what happens, it just fell apart. And the beauty of bear flags is a lot of times they overshoot. So a bear flag is basically a move down, like right here. So that's 11 points. And the minimum expectation from that break is 11 points, which gets you to 2059. But bear flags have a habit of overshooting to the downside. So sure enough, it went right to 2050. So that was a good one. Now, what I mentioned in here, and I mentioned this on the premium site, so I'm going to unlink these, is let's say you saw a bear flag in the NDX, and you saw a bear flag in the SPX. Well, which one do you short? You know, the components within. Well, this is the key. The NDX has this. Looks like it broke out, like you see in here. And you have the SPX, which fundamentally looked weaker to me. One is it was under its moving averages, and there were just more reasons to short it. But there are three of them. And the last one you should look at is the Russell. And the Russell, on a 78-minute, never got close to its moving average, was overbought. Then it went to a new high on lower RSI. That was the one to key off of. Now, right now, it's gone back up, but I'm just saying that when I pick a product to trade, I try to take the one that is the weakest. And as you see on here, the second it broke right there, it went down 1155, 1140. 15 points on a $1,100 product is pretty good. You know, 1%, basically 3 periods right there. So you're talking about in 45 minutes, it went down 15 points. So the idea was you shorted yesterday when you saw this bear flag and you just ride it out. How would you trade the Russell? Many ways to trade it. You can take component stocks. You can take actually the IWM, which you'll see is very similar, and they have actively traded calls and puts, and trade it that way. Look at that. Same thing right here, 114.50 to 113. That's a nice move. So if you look in here, you'll see IWM actually trades a lot of options if that's the way you want to trade it. It's rallied a little now, but as you see, the volume, 22,000, 10,000. Now, this is simpler stocks. A lot of times what I'll do is I'll just short the ETF. And that's the way to play it. Like I said, I don't want to show option strategies. I'm just showing you that if you want to trade options, you could do them in IWM. Some of the other products are a little too thin. So what I'm looking for the beginning of next year, still the divergences in place. Number one, we have no idea what fund managers are going to do on the first day of the first day of the year. But let me give you a sort of for instance of what I'm thinking. And that's this. I'm going to link them so you can get an idea. Now I'm going to put up the Nikkei. And I've been mentioning this on the premium side for a long time, that if the Nikkei sells off here, because it's been one of the best performing indexes, in fact, it was up 9% last year, this year, up to today. If it breaks this and goes to here, that's not going to help the SPX, number one. Number two, there's a thing that it looks like I coined, because I can't find it anywhere else, called a ledge trade. Basically, the more times that you can draw almost a horizontal line and connect all these lines, the more significant. If it breaks this, you're talking about right here, at least an 800-point move down. An 800-point move would get you down to this area, and it could do it quickly. My thing is that if you wanted to short today, let's say, because you're like, oh, I think we're going down next year, you could, if you see this kind of Nikkei chart, you might want to do a tiny trade just in case this opens way down on Monday. I like to wait and see how things shape up, but that's one way you could play it. So the other things I'm watching in here, still the divergence in the transports, watching the bonds still with an inability to rally, And like I mentioned on the premium site and on the free site, this idea of the bonds refusing to rally could set off a big breakdown in the bonds at this level, which this will be one of the few times in here where the yields start to matter. The first time in years, actually, because a quick move down another percentage point could really hurt our market. At least that's my opinion. So I hope this helps everybody. I'm doing just a short session today so everybody can get out to the New Year's Eve festivities. Just so you know, we have the $7 trial for 30 days. And it looks like on Tuesday we're going to do a live chat. And we're going to start doing that every day from 7:30 to 9. I'll be on actually live for about a half hour in between. And the rest of the time we can just interact everybody in a live chat format. So I hope this helps everybody. Like I said, take care, and I will talk to you next year.